Welcome to Morning Brief. I'm Julie Hyman. It is a busy day on Wall Street. Let's get to the three things you need to know today. President Trump nominating Kevin Warsh as his pick to replace Fed Chair Jerome Powell. Warsh is a former Federal Reserve official himself who supports the president's criticism of the central bank. He still has, though, to go through the Senate confirmation process before taking over in May. Let's get a check on futures, which are pointing to declines at the open, but they are off earlier lows. We're also watching shares of Apple, of course, the tech giant posting record iPhone sales, but that's not enough for investors as concerns over rising costs loom over the company. And the biggest market mover on Friday, the metals, gold and silver plunging after their blockbuster run. The Kevin Warsh pick for the Fed helping ease some concerns around Fed independence, perhaps, and as a result, providing some support for the dollar. Let's get a check in on stock futures here this morning. Apple definitely weighing on things this morning. We also had ExxonMobil and Chevron report. They had seen some early weakness, so that also taking a toll. Right now, Dow futures down more than 250 points. S&P futures pointing to a drop of 0.5% at the open. NASDAQ 100 futures off by about 0.6%. We got to check on what's going on in the bond market as well in response to this nomination of Kevin Warsh. And there we are seeing a little bit of an increase in yields this morning. We're going to talk much more about this throughout the morning, but Kevin Warsh has a history of being a so-called hawk, being somebody who is in favor of tightening policy, raising rates from the Federal Reserve historically. We'll see what kind of Kevin Warsh we get this time around. So let's dive in here. President Trump has indeed tapped Kevin Warsh to lead the Federal Reserve. The president made the announcement on Truth Social this morning where he touted the nominee's credentials. He noted that Warsh was the youngest person ever to be a Federal Reserve governor. For more on the announcement and background on Warsh, we're joined by Yahoo Finance Fed correspondent Jennifer Schonberger. Jen?
Good morning, Julie. That's right. President Trump has tapped former Fed Governor Kevin Warsh to be the next chairman of the Federal Reserve. The president saying in a Truth Social post when he made this announcement just shy of 7 a.m. this morning that he has known Kevin for a long time. He has no doubt that he will go down in history as one of the great Fed chairmen. And notably, the president saying he will never let you down. We know the president had been looking for someone who would be loyal to him, someone who shared his view that interest rates need to be lower. And Kevin Warsh is of the mindset that rates should be lower. He has been a Fed governor himself. Warsh was a Fed governor appointed by former President George W. Bush from 2006 to 2011. And it was during that time that we experienced the great financial crisis. And he acted as the liaison to Wall Street during that time. He has also worked at Morgan Stanley at M&A, and he holds a degree in public policy from Stanford with a focus in economics, as well as a law degree from Harvard University. And now the president had been looking at Warsh to be the potential Fed chair back in 2017 during his first term. He ultimately was steered by then Treasury Secretary Steven Mnuchin to go with Jerome Powell, something that the president has lamented on numerous times he felt was a mistake. So here we are a second time around, Kevin Warsh, now the nominee. As you mentioned, he has historically been a hawk. He has been one to raise interest rates in the face of inflation. Over the past year, he has taken a bit of a different tact. He said that the Fed needs to throw this notion of stagflation out the window, that we have a productivity surge that is being driven by AI that will bring down inflation and thus rates can come lower. And he believes any impact from tariffs will be a one-time occurrence.
And Jen, just quickly, it still has to be confirmed as well. And Senator Tom Tillis out this morning saying he is still on track to block a confirmation going forward.
That's right. This is a bit of a historical time right now because the Department of Justice has opened a criminal investigation into current chair Jay Powell over his testimony before the Senate last summer. And Tom Tillis, as you mentioned, has vowed to block any nomination by the president until that a criminal investigation is resolved, and there are other Republicans in the Senate as well who do back that. So that could be a bit of a fly in the ointment here that could prolong the process. There's no knowing how long that is going to take, but we do know that there is support within the ranks of Republicans for Warsh. So perhaps once that is passed, it should be a quick confirmation process to get Warsh in place.
We shall see. Jennifer, thanks very much. Let's talk more now about what Kevin Warsh means for markets and the economy. We're joined by Julian Emanuel, Evercore ISI Senior Managing Director, and Joe Brusuelas, RSM Chief Economist. Joe, just to start with you here, Jennifer mentioned the sort of history of Warsh here, that he served on the Fed during the Great Financial Crisis, and there have been a lot of questions about his positioning during that time. I mean, but how do we bring that to today and try to extrapolate what kind of Fed chair this guy's going to be?
Well, I think the first question to ask is Kevin Warsh a man for all seasons or a chameleon? You know, he's traditionally leans to the hawkish side. He certainly has some, what we'll just call unorthodox views on the radical reduction of the balance sheet. You know, low rates, liquidity, and leverage are the holy trinity of modern finance. We've got a $31 trillion economy that demands a much larger balance sheet than what existed 20 years ago. A lot of times when I hear Kevin Warsh speak, I'm hearing an echo of 2007, where, let's just be blunt about this, he missed the mark. He was arguing for an overconcern and really too much of a focus on inflation at a time when the economy was experiencing a deflationary, depressionary-like shock, and unemployment was on its way to 10.1%. So there's good reason out there, while Wall Street is looking at this, at least interpreting it early, as a hawkish appointment. And Mr. Warsh needs to be pressed inside the Senate Banking Committee on, will he preserve the central bank independence? Just what does he mean by reducing the balance sheet? What does he want to go with reforming the Federal Reserve? And what's his views on things such as reducing the supplemental leverage ratio within the context of financial deregulation, which is clearly going to be one of the big things this year, Julie?
Okay, Julian, let's get to you, because we are seeing yields come up a little bit on this nomination. How do you think what are the market implications of this pick?
Well, let's step back for a moment, Julie, and consider the horrendous inflation statistics we got at 8:30 this morning. And in fact, given those numbers, the yields are actually very tame. In our mind, Warsh is really the example of that Keynesian statement, when the facts change, I change. And he's been very quick to acknowledge the potential productivity boost to AI, which is something we at Evercore ISI are firmly convinced is in the process of occurring. And so from that perspective, he is likely to be less dogmatic than believed. And frankly, when you think about markets, the push-pull of Trump this week endorsing a lower dollar versus Bessent coming on and saying, no, we want a stronger dollar, and the perception of Warsh being a hawk, not necessarily at the short end with regard to interest rates, but at the longer end with regard to the balance sheet, is actually the countervailing force that keeps the dollar intact. And in our mind, the fact that the dollar is firmer here is really good news and ultimately will translate into good news for stocks.
And by the way, the horrendous inflation data you're referring to is producer prices, which were out this morning, wholesale inflation, which rose final demand month over month 0.5%, which is 0.3 of a percentage point worse than expected, higher than expected. So there you go. That's the backdrop that we're referring to here. Getting back to Warsh, Joe, does a Warsh pick make it more or less likely that Jay Powell will stay on as a member of the Fed?
I think it's probably less likely. Let me address something Julian just said there on productivity. Well, productivity is increasing, and we think we will get a productivity boom. This has to do with investments made during the 2021-22 vintage. What's going on right now with AI is not going to show up for many years. We probably won't even see that to 29-30. So if Kevin Warsh is out there making points about AI will allow us to keep rates lower than we otherwise would right now, let me tell you, that's a real inflationary risk. That PPI data, you know what that implies when we get the PCE data, which is what the Fed sets policy on? PCE is going to be at or above 3.1, core PCE well above that. And as far as we know, that core PCE number is the best long-run predictor of inflation. Let me tell you, this economy is not going to get back to 2% inflation anytime soon. We're going to be running at or near 3% for some time. And that's why Kevin Warsh has to be pressed on these views.
There are also implications of what you're talking about in terms of that inflation outlook. And Julian, what you're talking about in terms of the dollar for the metals. We got to talk about the metals this morning, Julian. And I know you've been getting a lot of client incoming questions about what's been going on, because we have seen these soaring gold and silver prices, but today we are seeing them reverse in dramatic fashion. So what are you telling them when they call you and ask you about this?
No, and actually, again, the correlation between stocks and the metals shifts in the near term and in the longer term, and in the lens of this week. Frankly, more clients want to talk about gold and silver than they want to talk about stocks, and it has really been a very tense conversation, wondering what it is that the metals show about the danger in other risk assets. And frankly, this action today tells you what they show is just an asset class that's gotten carried away speculatively, and some of the froth is being blown off. And to that extent, it's actually balm for the equity investor. The message is not as profound as one might have thought a couple days ago. So, and that's too is positive for stocks.
Sorry, just to put this a different way then, Julian, you don't think that the soaring prices that we have seen are reflective of some deep-seated concerns about, say, the long-term viability of the dollar?
Well, look, if you think about all the reasons that various investors might have for going into gold, and in our view, the dollar made a major multi-year top last year. And so from that perspective alone, the asset reallocation that we've seen, whether it's into metals or into international equities, is a logical outcropping of that top. But in our mind, this is in no means a sort of sell the U.S. Type trade that a lot of the people expressing more concern have talked about. And to that end, Warsh is actually calming for that aspect as a counterpoint to President Trump, who would prefer a weaker dollar on balance.
Great discussion, guys. Thank you so much for hopping on to react to this news this morning. Joe, Julian, appreciate it.
Thank you.
Coming up on Morning Brief, Apple sees strong iPhone demand. We'll talk about the numbers and why the stock is lower. Apple topping first quarter estimates as demand for iPhone surges. iPhone revenue climbing 23% year over year to an all-time record of more than $85 billion. Let's talk more about it in the tech landscape more broadly. Joining me now, tech editor Dan Howley and Paul Makes, Freedom Capital Markets Managing Director. I just saw those shares are a little bit higher now, which is a turnaround. Dan, you were tracking those numbers as they were coming out. Now that you've had a little time to percolate, to simmer, for the numbers to simmer, what are your top takeaways, Dan?
Yeah, I mean, obviously, explosive iPhone revenue, right? Just out of control, blew away. The estimates said 85.3 billion was the number that came in for iPhone revenue itself. The expectation was for 78.3 billion. The prior first quarter last year, that was 69.1 billion. So just a huge year-over-year jump and easily outstripping estimates. Also beat on the top and bottom line. Revenue about for services just came in line at 30 billion. So, a big quarter for the iPhone. However, that also is playing into the future quarters for Apple, because now they're actually constrained when it comes to chips that they put into the iPhone, those nodes that they put in, the packaging that they do for those high-end chips for the phones themselves. And so Tim Cook was saying on the phone call, basically, look, we're trying to do what we can, but we had seen such intense demand, more so than we expected, that it's going to impact supply going forward. And then, oh yeah, on top of that, remember that little memory thing we've been talking about, just a small global shortage. Well, that's now coming into play with Apple. And so for them, Cook was talking about how it's likely to impact margins going forward. Now, they said that margins would be about the same for Q2 as they were in Q1, and that's not necessarily a bad thing for them. However, he did point out that it could be a bigger problem going forward. And so that's where people are going to have to look, because the supply of memory is incredibly constricted right now. It's basically just going to the highest bidder. And it's not going to change anytime soon because of this huge AI data center build out. And you can say, well, can companies just stand up new factories? You know how long it takes to build a factory?
Right.
A little bit of time.
Yeah, most definitely. So Paul, there's nobody bigger than Apple, right? I mean, I guess NVIDIA on the data center side, but are you confident that Apple will be able to navigate some of this memory chip pricing pressure? Will they raise prices? Will they have other levers? What do you think?
They definitely, given their heft, have buyer's power. If you're to take a look at Harvard Business School professor Michael Porter's rubric. But I would tell you, these are some tactical challenges. But I think the bigger strategic challenges here are, one, Apple, despite pretty subdued overall revenue growth the last couple of years, and maybe a little bit higher EPS growth because you have consistent stock buybacks. This has not been a fast growth company, and yet, it's trading, even after I boost my EPS today for the out year, at 29 times earnings. And they've had a nice resurgence with iPhone sales each of the last 2 quarters, and they have really impressed me with that. But overall, expensive stock. And so I think the stock had run into the quarter. And, there's still going to be, on a strategic basis, a lot of concern about what are they going to do and how they're going to monetize AI. So they do have some tactical short-term issues like the rest of the semiconductor, particularly with memory shortage and memory pricing. But I think those 2 strategic issues that I just mentioned are a bigger gate on the stock.
And just quickly on that front, Dan, they have made a couple recent moves on that in terms of partnership with Google and also an acquisition. What's the sort of thinking there on how that's going to move the needle?
Yeah, it was QAI was that acquisition. I believe the information said that it was around $2 billion. So, a relatively large acquisition for Apple here. So second largest after Beats. This isn't something, though, that's necessarily going to go into, their overall AI plan. It seems as though this is going to be something that perhaps allows you to use AI in some way with regards to wearables, perhaps with the AirPods or, a smart glass thing that they're working on. And Cook had talked about the Google kind of tie up here. This isn't the first time that they've worked with Google. Usually they're on the money receiving side because they use Google search as the default for the phones when it comes to the actual spotlight search, things like that, Safari. That's been a huge benefit for Google, but now Apple is leaning on them for the AI models. And so he wouldn't go into too much detail at all. And some of the analysts were trying to wriggle something out of him, but they couldn't get him to crack. But it does seem as though, it's a good direction for them when it comes to the AI itself. And this could just be a stopgap measure, right? Until they're able to get their own in-house models together and then implement them in some kind of, software setup. But, at this point, I still very much believe that nobody is going to buy an iPhone because of Apple Intelligence. They're buying these new phones because of the cameras, the kind of redesign, the fact that we're circling COVID, 6 years on just about. People are getting new phones, and the batteries are great in them. So it's I think more to do with the actual phones themselves. I've said this before. Nobody went out originally and said, "Boy, I can't wait to get that Siri in my phone." They were like, "Oh, that phone has a better camera. Let me go get that."
Or they just needed a new phone because we all need these things now because they're integrated inextricably in our lives for good and for ill. Speaking of AI, though, I do want to move on, and I got to ask you, Paul, about these reports that Amazon is in talks to invest $50 billion in OpenAI. So, I mean, it feels almost like another day, another one of these investments. We haven't had as many this year. So what do you make of that?
I really hope it happens because I formerly cover the neo clouds and other AI infrastructure builders. And it is critical, whether through be a big private round or even an IPO later in 26, that OpenAI raises equity, and a lot of it, because so much of this ecosystem, Julie, is dependent upon the spending intentions of OpenAI, 1.4 trillion in only 4 years. Well, they're going to need to raise a lot of equity. So I hope this happens. I think the recent equity raise, which was very successful by Anthropic, makes me feel better about it. But I hope this works because, man, a lot of folks are dependent on OpenAI raising equity.
So this is interesting, though, that you say you hope it happens for the sake of OpenAI and the neo clouds, not necessarily for Amazon. I mean, is this a good idea for Amazon to be doing?
I think so. It depends on the terms, right? That's always the details. But do they lock in Amazon Web Services capacity? Do they have another opportunity, even besides that, working with OpenAI to monetize their own AI intentions? I would think that it could be a good deal for both sides, but I think it's particularly important for OpenAI.
Dan, Paul, thanks a lot. Appreciate it.
Thank you.
Coming up on Yahoo Finance's opening bid, executive editor Brian Sozzi is joining me right now. Soz, I'm excited for the show today.
Julie, it's been a morning. We just finished talking to Starbucks CEO Brian Niccol about their turnaround plan. We got a potential new Fed chairman coming into the mix. We got Apple earnings. I don't know where to begin, Julie. It's just the show's coming up. You can do whatever you want with it.
I'll watch it.
That's
what I'm going to do with it, Soz. All right, thanks a lot. Looking forward to it. You got opening bid coming up next.